4-man FOMC meeting. Crypto is pumping. This is an emergency video because right now we are seeing a bounce back in the charts. What did Jerome Powell just say? What impact does this have in the market? I'm going to break it down and a lot more. If you appreciate these updates, guys, don't forget to smash the likes. Don't forget to subscribe. Even when I'm traveling, even when I'm out and about, I'm here to give you guys the updates. So let's take a look at the charts. So as you can see here, guys, this is when the interest rate decision was announced. You can see the price initially fell a little bit because we didn't get a rate cut, but none of the markets are expecting a rate cut anyway. Since then, we've seen a nice climb back up here. You can see Bitcoin getting close to that 59,000 area, trying to break back above 60,000, which would be a major, major coup. Now, there's a few important dovish messages that Powell has been sharing. First message, which we have to pay attention to, was yes, we didn't get a rate cut, which markets weren't expecting anyway. But if you look at the details, the quantitative easing cap has been reduced from 60 billion to 25 billion. Markets were expecting that to change to 30 billion from June. So this is an extra dovish step from Jerome Powell. He's also coming out and saying, look, we're not going to cut rates, right? We're not going to cut rates until I'm seeing more confidence that we're getting closer to that 2% target. But he wasn't crazy hawkish. We were expecting, well, the market was expecting, the reason we saw this dump and this rotation to risk off, they were expecting that Powell would jawbone, that he would get the market to tighten, to panic the market, to tell the market, like, guys, we're out of control here, jobs are out of control, we've got inflation out of control. But he's not come out like that. He's come out fairly calm, fairly neutral, and that is giving markets confidence. Now, the question is, how long is this going to last for? I'm going to share with you the bigger pattern. But for now, this is actually quite positive. But doesn't take away the bigger risk, right? The bigger risk, the reason the market is nervous is we're worried about this thing called stagflation. What is stagflation? Right? It's when the economy is not performing as well. We saw a low GDP. I know it's preliminary reading, but it was a low GDP reading for Q1. And then you've still got this rearing head of inflation, where inflation is just not backing down. If you have low growth, high inflation, this is known as stagflation, and this is worrying the markets a little bit. Now, Jerome Powell is coming out and giving us confidence. He's saying, look, to be fair, we're in better balance now. So maybe he's seen something in the data or the way he's interpreting the data to say, you know what, he thinks we're going to manage. That being said, markets are now on the understanding that we're not going to get many rate cuts. We may stay at this 5.25 level for a while until at least we see some sort of better direction of travel towards that 2% target. So if we bring this back to the technical analysis, you can see this is the pattern we broke down from, right? A bullish continuation pattern I shared with you guys over 6-7 days ago when the original data started coming out saying, guys, this is worrying. We're curling over. So you would have had plenty of time here at 67 to prepare yourself for this dump all the way down to 56, 57. Now, we have broken down. We've confirmed that we've broken down, and there's very little support until the 50 to 52K region in here where my cursor is right now. So don't just think, oh, we're out of the woods now and we're going to bounce and go straight to the upside. Not necessarily, because the pattern has broken down. We're going to have to gain a little bit of footing somewhere. Let's also check in on the dollar index to see how the dollar index is reacting to this Powell news. So if I drop this down to the hourly chart, you can see originally the dollar index took a big tumble to the downside as Jerome Powell decided when Jerome Powell was speaking. This is a good thing. Remember, we want the dollar index to go down. If it goes down, that means risk is coming back on, because over the last couple of days, the dollar index has been quite strong because risk was rotating off in preparation for this FOMC meeting. But now markets are starting to calm down a little bit on this news. So there you have it, guys, another installment in this huge rate hiking cycle. Yes, we're staying high for longer. At one point, we thought we would get 3 rate cuts this year, and we're not, right? Let's just face it. We're probably going to get 1 if we're lucky. Now, the other thing we need to be very, very wary of is something which is really interesting, which I was reading this morning from a strategist. What the strategist said was, actually, we're in a bit of a tricky situation, because if Jerome Powell now comes out over this meeting or the next one and does do a rate cut, even though inflation is showing itself as quite high and the labor market is quite strong, that actually poses a different risk. And it's interesting because what it basically signals to the market is that the US can't afford their debt repayments. So you have to understand, the US is paying $660 billion a year just in their debt interest. That went up to $850 billion. It's gone up over 30% since the rate hiking cycle. So their interest payments are taking a big climb. It's taking a big hit to the upside. So another clue is that if he starts cutting, even though the economy is not showing a reason to cut, That could be a horrible signal for the market. Say US are actually insolvent. They're in a bit of a problem here. They're struggling to make their interest payments. So loads of different factors to play out here. Right now, I'm not getting shaken out. There's no way you're shaking me out this market. A fall down to 50, 52 is not going to bother me whatsoever. Yes, the fear and greed will go down. Yes, people will be scared. Yes, people will be liquidated. For me and for all the experienced people in the crypto market, we're taking the opportunity to buy the dip, right? Fundamentally, that's what you want to do. You just want to buy the dip. Just want to buy the dip. You want to have patience. You want to hodl. You don't want to get scared. Because look, the rational investor navigates this turmoil. The people who panic are those that had no conviction, right? They're just moving with the wind. A little bit of scary news yesterday and then good news today and they're jumping back in. They're just getting themselves wrecked constantly. Be patient. Be methodical. Have a plan. But ultimately, don't get shaken out. If you appreciate these type of updates, guys, don't forget to smash up the likes. Don't forget to subscribe. Check out the links in the description to Bybit, to Mexi, who support the channel and offer you some amazing bonuses as well. Thanks for watching, and I'll see you in the next one.